was a lie. Paid for a course from some suit and a tie. Promised me riches, but all I got was regret. Blew my first stack, had to learn from the dead. They told me play it safe, don't take the risk. But I saw freedom in a candlestick. One right move, now the game's unlocked. No more watching clocks, now I watch my stocks. Long one, short two. Now they asking, can I trade like you? I just left, tell them chart already knew. Stack it up, flip it, watch what I do. Late nights, all in, but the numbers don't lie. Ain't a gamble when you see through the sky. Short life, one shot, yeah, it changes your view. Stack it up, flip it, watch what I do. Took L's, lost racks, almost called it a quit. But I stayed in the game, never ran from a hit. Watched all the fakes flexing, ran in McLarens. Talking big wins, but the charts look barren. They said you'll never make it, you'll just crash. But I see dips as discounts, not my last. One good read and the future's mine. Turn my laptop screen into a gold mine. Long one, short two. Now they asking, can I trade like you? I just laugh, tell them short already knew. Stack it up, flip it, watch what I do. Late nights, all in, but the numbers don't lie. Ain't a gamble when you see through the sky. Short life, one shot, yeah, it changes your view. Stack it up, flip it, watch what I do. No boss, no shift, no ceiling, just risk. Turn stress into wealth with the flick of the wrist. No luck, just skill, no wish, just will. Every loss that I took only built my thrill. They don't see the grind, only see the glow. Didn't watch the nights when I stayed alone. Didn't see me broke, just see me paid. Didn't see the price I had to pay. Long one, short two. Now they asking, can I trade like you? I just laugh, tell them chart already knew. Stack it up, flip it, watch what I do. Late nights, all in, but the numbers don't lie. Ain't a gamble when you see through the sky. Short life, one shot, yeah, it changes your view. Stack it up, flip it, watch what I do. Told me I'd never be nothing, now they watching from the side. Funny how the tables turn when you just survive. Yeah, I ain't even mad, I just let them see. Came up from the bottom, no one showed me how to win. Now they tryna claim me, where was you back then? Had to take some losses, had to cut off some of them. Used to doubt me heavy, now they act like we was kin. I don't hold no grudges now, I just let it go. Used to flex on me, now they begging for a roll. Told me I was crazy when I said I had a vision. Now they see it playing out, no intermissions. Oh, they try to break me, yeah, yeah. Had to learn the hard way, yeah, yeah. Turn the pain to power, now they gotta watch me shine. Took my L's and flipped them, now the W's are mine. I'm still standing, I'm still popping, yeah. Took them shots, but I ain't dropping. Nah, you could throw your shade, but it don't block me. They was praying on my fall, now they watch me. I'm too solid, I don't bend, nah. I don't lose, I just win, nah. Try to count me out, now they counting up the M's, yeah. Tables turn quick, now they wanna make amends, yeah. Can't stop me now, had to learn to hold it down. Yeah, I'm way too high to fall, I'm still standing tall. Now they wanna act like they was always in my corner. Told me I would fail, now my wind's getting warmer. I just stayed patient, I just stuck to the plan. Took my pain, made it fuel, turned the loss to a brand. I ain't even bitter, I don't trip on the past. Told them I'd be great, they just laugh. Now they see the vision, now they see the plaques. Funny how success bring the ones who used to lie. Try to break me, yeah, yeah. Had to learn the hard way, yeah, yeah. Turn the pain to power, now they gotta watch me shine. Took my L's and flip them, now the W's are mine. I'm still standing, I'm still popping, yeah. Took them shots, but I ain't dropping, nah. You can throw your shade, but don't block me. They was praying on my fall, now they watch me. I'm too solid, don't bend, nah. I don't lose, I just win, nah. Try to count me me out, now they counting up the M's, yeah. Tables turn quick, now they wanna make amends, yeah. I ain't even gotta flex, now they know what it is. Used to pray for times like this, now I'm living big. Every single scar just made me who I am. Every hater just a fan who ain't know they was a fan. Whoa, can't stop me now. I've been way too high. Stacking bricks, building high, laid the blueprint, now we fly. Started small, now watch it grow. Turn my vision into gold. Wake up easy, sun hits right. No more rushing, taking flights. Calls on mute, stress on low. Living life the way I chose. Funnel of fortune, watch it spin. Set it up now, watch me win. Funnel of fortune, let it flow. Step right in, let the money grow. The cash rolls in, never stops. Alright, cash rolls in, hit the top. The cash rolls in, build it up. Funnel of fortune, never enough. Morning waves, coffee strong. Passport ready, I'm here then gone. Living life, no 9 to 5. Freedom hits different when you design. Wake up easy.
All right, good afternoon, everyone.
No more rushing, taking flights. Calls on mute.
All right, we got the FOMC meeting coming up here. Jerome Powell taking the stage at 1:30. And yeah, we grabbed some wins this morning. Excited about that. I do have one of my favorites up right now. We got 5 minutes until the release. We got one of my favorites up, Meet Kevin, down here. And we're going to be listening to some Meet Kevin while we cover this. Hold on. I felt it coming. I had to sneeze. Okay, so yeah, I'm definitely going to play some Meet Kevin here. He just knows the fundamentals really well. Maybe we'll get a beat from him after the news drops. I definitely want to give this some time. Usually we go in the opposite direction of where the market actually wants to go. So let's take a look at the charts just briefly. Oh man, sorry. Get back in the saddle here. Okay, so yeah, we definitely, I mean, look, the momentum right now, if you went to a 5-minute time frame, just checking out, you know, where we're at. We took out those highs from earlier. Let me turn on this liquidity indicator here. I'm going to be releasing a video today describing this indicator. Unfortunately, it starts with the letters I, C, T. Okay, but it is a pretty damn good indicator to show you liquidity levels very quickly. Instead of marking them on the chart, like why not have a cheat code? So anyways, this is kind of a mess. So I have to go to a higher time frame, like an hour, 1 hour time frame. But it shows you the high time frame liquidity on the chart. And yeah, we still have our buy side and sell side. Like we haven't really done very much as far as range today. We haven't really done anything. Okay, we've just been kind of caught in this 4-hour fair value gap that's over here. I don't have it marked, but price really hasn't done anything. But it did do something. What did it do? If you were on live stream with me this morning, what did I say that was going to happen with this 15-minute candle right here? And we caught this move up, right? But what didn't it have? Yeah, looks like price went and created that, didn't it? So it was a smart move to get out. Okay, we're gonna play some Meet Kevin. I gotta turn down, I'm gonna turn down my music. Appreciate the love on the music, guys, you know, always appreciate that. But yeah, I'm gonna turn up some Meet Kevin here and just see what he's talking about. Okay, we'll get a beat on this and then we'll see where we want to go
in the courses for people to want to stay subscribed, right?
Yeah, and yeah, when he's talking about his stupid courses and stuff, I'm not.
But anyway, going back to this, the most important categories that we're going to be looking for in the summary of economic projections are right here. I actually don't think that inflation is that big of a critical item.
Look, I mean, I'm going to let him do all the thinking. Why? This is like being a smart, business owner. Why would I try to be an expert in every category, right? I'm going to hire somebody like Meet Kevin to tell me what's going on, right? Bitcoin to 90 to 92K. Let's take a look. What's going on with Bitcoin? Let's see. Where's Bitcoin at? Yeah, I don't know, man. It's iffy. This is an iffy run up here. This is not like a V-shaped recovery. Let's take a look across the board. Gold at all-time high still. I mean, you're going to have gold back off. You're going to have the dollar drop, which is not doing that currently. You want yields to probably go up, okay, the 10-year. And you want Tesla to go up. I'm hoping some of these stocks recover big time. Tesla really didn't deserve the dip that it got. Boy, that Mark Rober situation is really heating up, man. I think they might sue him. I don't know. That's gonna be crazy if that happens. Let's see here. Black, yeah, green, black, apply to all. Good. Yeah, but right now, total indecision, and we're just in indecision mode. Let's see if there's any SMT on the chart prior to the release. No, nothing. Actually, no, nothing. Okay, so I'm going to turn on Meet Kevin. We got about a minute to go. We're going to be about 20 seconds behind the ball. That's perfectly fine. I'm not looking to take some breakout trade. If it's crazy, we could potentially get a trade going, okay? Be very careful. Slippage, if you're trying to get a trade off of this, I really don't think that's a smart idea, but that's just my own personal view.
Yeah, like, I mean, but that's my goal always, is I'm trying to give you realistic perspectives. Like, it's so easy. Oh my gosh, the economy's falling off a cliff when you look at the Atlanta Fed numbers. Oh, we got to break this down.
Yeah, it's a code expiring every day with him. I get it. All right, 20 seconds till the news drops.
Tesla, they got a taxi permit to taxi their own employees around. Well, come on, man. Like, this is not a robo-taxi permit. This is entirely different.
Anyways, I'm just curious what he says when he dives into it. He's going to be my analyst. I hired him for the day. Isn't that... this is cheap labor. That's wrong. 7 seconds to go. Here we go.
And I'm going to pull up the statement the moment I can get my hands on that statement. And remember, if you want to check out that Meet Kevin membership, it's at meetkevin.com. Okay, here we go. It should be splashing over my screen in just a moment. Oh, my Lord. Okay, there it is. Fed policymakers see 4.4% unemployment rate versus 4.3. Tiny up. 1.7 on GDP for 2025. I guess 1.8. That's lower GDP than I expected. But that's okay because let me see what they say for 2026. Longer run. I'm going to actually get the doc up over here. But FOMC statements out. Hold on. Let's get here while I pull this up.
On both sides of its mandate, in a move that we will be debating, it removed the statement saying that risks to its dual mandate are roughly in balance. That came out of the statement this time. On the Fed's projections, it boosted core inflation to 2.8%
Nobody cares.
For 2025 from 2.5%, so 0.3 up. By the way, exactly mirroring the CNBC Fed survey. It kept 2026 at 2.2 and same for 2027 at 2%, suggesting the Fed either thinks it will control inflation through its policy or
already down 3%
Let's just get to
for
the actual
today.
numbers right here. Okay, here it is. So here it is, 2025. So remember, I guessed 1.8, and then they would go to 2%. We got 1.8. Oh, they wrote everything down. We got 1.7 and then 1.8. They wrote every year down. Oh, that's interesting. Look at that. They went from 2.1, I thought, to 1.8. They went to 1.7. Then they went from 2.0 and 1.9 down to 1.8. They wrote down all of those years.
These are all good for going long so far.
Down, probably as a signal for the tariffs. But look at this. A tiny increase in the unemployment. They only went from 4.3 to 4.4 right here. Nominal increase here. And actually, I mean, we could just look at the number underneath it, right? Because this shows us the difference. We don't have to click around. And
the VIX is still within that range.
PCE inflation, a smidgen higher. This is not
still
a big
in the
deal.
range.
Fed funds rate projection. They didn't change their projections at all. So still pricing in 2 cuts. No change of the projections here at all. Not a huge surprise.
Yeah.
Let me see some of the other notes that we got here.
I wasn't interested in the rate cut projection. I kind of knew that was going to stay the same.
Declined to $5 billion from $25 billion of monthly redemption.
And that could be a bad thing. Like the markets might like this out the gate and then not really like that. Like no good news is bad news.
In other words, they are slowing the runoff. Everybody voted for this except for Governor Waller, who didn't want the runoff to change. So a little bit less of a runoff. Let's see here. Okay, then we got...
See, VIX is right back in the range.
Forecast didn't change at all.
It needs to close down there.
Fed projections imply 50 basis points of cuts. This is what we expected. We thought they would give us 2. Markets were expecting 3. I'm like, it ain't gonna happen.
Yep.
They're gonna end up giving us 2. And sure enough, that's what happened. So now it's gonna come down to Fed Powell's commentary.
Yeah.
Where do we think we're going to go in the way of commentary?
Hawkish.
Now, my take on this is we're going to get a Powell. I mean, honestly, none of this is that bad.
Right.
I was actually, frankly, expecting a little bit more of a hit on unemployment. As you saw in my last sheet, in my last sheet, which I'll show you right here, the projection I made was I would expected a V-shaped decline in GDP and an uptick in unemployment. But we didn't get that. We actually got steady unemployment change, no rates change. That's okay. We weren't expecting that. And just basically they shaved a little bit. They shaved like 10% off the GDP numbers, right? Instead of 2%, it's now 1.8%. So basically exactly 10% shaved off the GDP numbers. Big deal, right? Not a big deal at all. So I find that very interesting. Now, what is really going to happen now is we've got to evaluate, does this really change anything for markets? My take on this is no. Today is somewhat of a day of kind of get Powell over with and move on.
Sorry about that.
Now we'll look at just a moment. Let's go ahead and see how the Qs are reacting.
So far, this is doing exactly what I thought.
Honestly, somewhat flat. Probably just because we're waiting.
Yeah, so look, we're waiting to see what Fed Powell says. Yeah, you're right, Kevin. It's somewhat flat. It's kind of like what I've been saying, what I said this morning, that we could just have a nothing burger and pretty much be flat for the rest of the day. And then possibly overnight session, we'll see Asia, London. These are the times when, and I don't know how it happens. I don't know who's trading at that time. And maybe like market maker, institutional, robots are in there. But a lot of times you'll see the market just take off and not give retail a chance. You'll wake up the next morning, 250 points, in the green. It's a gap up. Everyone's thinking they're going to go down and fill the gap, and the sucker just takes off to the highs and leaves the gap for forever, and that was the dip, and there you go. And we're back to all-time high sooner rather than later. But I just don't know, man. I don't know if this time's going to be different or not. We have a 70% chance we go up, right? 70% of the time, once the market corrects and puts in a 10% or more correction, when we have 2 or more green days in a row after that, it never retests the bottom of the correction. We're done. It's only happened 5 times in history that we go back down further, and those times were not fun times. Those were recession times. And then one of them was COVID. So I guess not all of them were recession, but we are seeing the dollar fall off, which is nice. This is a good indication of the market possibly wanting to lay off of safe assets. This is when you see the dollar drop. This is good for equities, right? This is good for Bitcoin. It's good for equities. Typically, this is bad for gold, but you're seeing gold go up too. We're having this weird. We're just in a weird time, man. I know a lot of traders really had trouble today, this week, this month, this year. I know a lot of traders have had trouble this year. We've actually been on a tear. We had our first down day Monday, but other than that, it's every single day. Just, I don't know. I'm seeing other traders hate this market, and I honestly really love it. I don't know. It's just been so easy for us, and I hate. I'll knock on wood there for us, right? But the reality is we kind of got to see what Jerome Powell says before we really put the nail in the coffin. But we're seeing rates fall, the 10-year falling. We're seeing the dollar fall. We're seeing Bitcoin fall, which is like, damn. That's not what we want to see. The initial reaction was like, let's go up, baby. And now you're just seeing that reversal. So I get it, man. We want to be bullish on the market. We do have a better chance of going up than down, but we just have to pay attention to see what's going on. This Bitcoin drop is scary right now. Gold popping up is scary right now. Gold is a safe haven. So when gold goes up and it's already at all-time high. Guys, like, look at the 1 hour chart. My gosh, if you're not paying attention to gold, I told you this was going to get tagged. I don't even know when. This is like the 17th. So let's see. This was Thursday of last week. We went in this consolidation. Monday is we were already above it. So this had to have been back here like 2 weeks ago or a week ago. Oh, no, this is last Wednesday. Oh, yeah, because I'm on the hour chart, right? So, I mean, the idea of gold going up is a good idea. That's a good idea because we're in a bear, like not technically a bear market, but we're in a downtrend. And whenever we hit a downtrend on equities, you can pretty much bet that gold's going to go up. As long as you're seeing other things happen, like the VIX go up as well. Like the VIX, when the VIX is trending up like this, I mean, now we're trending down. So I wonder if we break the low here, the market, once again, 70% chance we go up. So it's not a one-to-one correlation. That's why I don't really look at correlating, assets too much, right? It's not a one-to-one, not directly. And I do the same thing in Forex as well. If you trade Forex, we're looking at different correlating assets and just seeing how they kind of relate and play off of each other. If you see one go up, the other might go down and vice versa. I'm not really going to be looking at Forex today, don't worry. But yeah, these are the sessions, right? So we had a very mild Asia session. We didn't really do anything but take out Asia low and the overnight low for London, which is fine. That's expected. So it takes the low, moves up to the high. We open. New York session opens. We grab highs. We grab previous session high. This is a previous New York session over here on the left. So we grab previous New York session high. And now the market's consolidating and it's just waiting. And that's what you're seeing happen. We're in upward structure, upward trend trajectory on lower time frames. If we go to the 1 hour time frame, here you can see we're still within a range. So we have not broken outside of this range. What I want to see is price really give a leg up. This has got to really break this level over here, right? If we stay pushed into sort of this condensed between two ferns, if you will, right? Then I'm really going to have a hard time judging where market wants to go. But if we just mark the high and the low here, judging just from market structure, right? Just from the high of the market to the low, you're in between this range. And if you look at this, right, I'll break this down for you. You have a pullback, you have a high that fails. So this is swing failure. You have a pull, you have the market pushes lower, doesn't really break, doesn't really break the trend. I have no 3 candles pulling back here to the left until I get to this consolidation zone. So none of these, like this is not a break of structure to me. This is definitely not a break of structure because we didn't have a higher high made. So whenever you look at structure, you go to the highest or lowest point on the chart and you ask yourself, what created this? What created that level right there? And you got to go all the way down to this level, right, before you actually get there. So market pulls down, and I'm going to go ahead and mark this level right here. So you're in between a higher time frame range. That's the highest point on the chart. So technically the range is actually bigger than this. That's the actual range. If you were to count this as, structure being broken right here, I understand that a lot of people would look at that and say structure's broken. I get that. That's just not the way I look at structure. It has to have 3 candles for a pullback in order for me to count it. And that keeps me it's consistent, right? So I'm not looking at like 1 candle pullback and marking that as a structural level. And it's just, whether I'm right or wrong, it helps. Okay. Yeah. Classic cat setup for sure, man. Yeah. I could see that too. Jacob. Yeah. Yep. Yeah, so I mean, we haven't really done much of anything. We had a structural break. We're in between. Here's the high, here's the low, right? Market pulls up, creates 3 candles, pulls down, break structure inside of a higher time frame range, and we're still within this crazy ass range from over here. Here's the high, here's the low. Look at this. The whole market is within like a day. 1 daily candle. The whole market's within 1 daily candle pretty much. So it's very tough to judge what the market wants to do. Let me see what Kevin's saying.
We'll draw a line from the 2.
Okay.
Yeah. One person.
Okay.
One person is a big dirty bear. Big dirty bear here. And they were not here.
Nice. I'm not a big dirty bear. All right. So yeah. We'll see what happens, but I'm just sort of waiting now for Jerome Powell to hit the stage. I'm sure Kevin's going to cover it. We're going to have to be patient. it could be, guys, if Jerome says one thing that sets off like something that's unexpected, something that maybe he's very hawkish or extremely dovish, and this is a nothing burger. It could be, man. But as a trader, I just have to be patient and really wait for a breakout. Right now, just judging from momentum, we are completely neutral on the day, right? Totally neutral on the day. If you go down to like a 5-minute crazy horse, we're in the middle of, like, we pushed up. We're a little bit of downward pressure from this drop right here, but we haven't broken the high. We haven't broken low. We're just totally neutral on any higher time frame as well. You're just almost going sideways. And you can see the bands are skinny. They're compressed, and that just means that we haven't expanded. There's no real volume in the market right now. Giving an expansion. Okay. So we have to be patient. That's it. Oh, look, the coupon code for Kevin is expiring.
Nice movement since the statement. Nice.
Expiring tomorrow. Yeah, but I like the crazy horse bands on a lower time frame, right? I like to really have these on a lower time frame so we can catch the moves early. I'm not going to be swing trading, so it's really a day trading type of move or scalp type of play. So it's either the 1 minute or the 5 minute. And here's the day. Look, here's our day right here. We're in between this daily candle, like I was saying. Like the whole market has pretty much been, for the majority of trading, inside of this one daily candle, right? We do have our shelf up here. I was saying that this is a really good level for price to come back and retest. We do have the 200 daily moving average at this daily time frame level as well. So it makes a lot of sense. You can make a lot of compelling arguments that price is going to go back up there to tap that. By the way, if you are not in our free school group, this is our free school group. We have tons of training in the classroom that we just launched in here. It's called the challenge. This is a trading challenge. And I put not only the strategies that I've used over the last 4 years, and some of them are, we actually have this new indicator, the TMT bands indicator, and I have a bunch of back testing in there. There's a lot of people in here that trade using this with the custom indicator, and they really love it. The strategy has gotten a lot of them profitable, us profitable. We traded every single day. I do it live Monday through Friday. And it's just one of 3 setups that we teach. So, if you want to join this, it's absolutely free. I'll make sure that the link, let me put the link here, is inside of the chat. So I'll put that up as well. Actually, if somebody can post, I don't know, Stuart, if you're in here, if you can post the link, I'll go ahead and pin it. If you could do that for me, brother, just whenever you can. So the indicator, I show the indicator in the back testing, and you can see it in the free community, but you have to be a paid member in the paid group in order to get access to the indicator, as well as like tons of other, how badass is our community, guys? Like you can ask any question in there, and pretty much a community member is most likely going to get to you before I get to you, because we're extremely active. Look, people don't like us talking about like how to actually get profitable. It's hilarious. The community where a lot of training is at, and I can actually learn how to trade and stop blowing my account. I'm out of here, dude. People are retarded, bro. Yes, this is a community. It's absolutely free. And if you pay to get into the paid group, literally, what do other gurus on YouTube charge? It's $47 a month. Like, it's for all the training, for the community access, for the indicator, like everything that we're doing. And so many people in here are getting profitable because of this. It's ridiculous. So we reduced the paywall. If you want to upgrade to like an annual membership, you unlock, like literally, I'm doing a 2-hour backtesting session again live this Sunday. I've already done 2, so that's 4 hours right there of backtesting. And when I'm done, it's gonna be like 10 hours worth of backtesting that you can watch. And it's all live. We hit the random button. Everyone watches live. It's not, you ask people in here, they know. Do we have losing trades? Yes, but the sessions have been really good. I think the first session was like 49% growth within the first 2 hours using a hard stop and then using dynamic money management. So the first half we did an hour of just using a hard stop, right? Using this right here, using this strategy here. It's called Crazy Horse, right? And just using a hard stop. The second half we use dynamic money management. And this last, and it was like 67 trades that we took. And then this last Sunday, I think it was in the high 40s, I want to say. And we grew the account by like 47%. So it was less trades, a higher growth potential because we use dynamic money management the entire time. So really cool stuff, man. I mean, like, I don't know what to tell you. The group is awesome. I know we're covering FOMC.
Also
Don't worry,
covering that in
nothing's
detail.
happening
So
right
here's
now.
the statement.
I'm
All right.
waiting for, okay.
Uncertainty.
Okay, so this is what Jerome Powell's like going to read. So we have his statement and everything. He's going to go through it a little bit. Let's listen.
Increased. So they've gotten rid of this idea about a balanced risk to unemployment inflation. But, you know, they didn't, like, they're telling us uncertainty has increased, but let's be real, they didn't indicate a serious or meaningful increase in the level of the unemployment rate, which I think is a drastic mistake. There's only one person who's doing it at the Fed. There's only one bear, as we said. And this bear, I think, it's possible. There are a couple explanations here. We don't know who this bear is, but it's possible they're in a district getting hit.
I'm going to take just a second here, guys, while he's talking about that and show everybody, if you're not familiar with what we're doing here with the TMT Crazy Horse bands and me saying I did 2 hours last Sunday on a back testing. I do 2 hours this Sunday. I did 2 hours the Sunday before that. And I'm going to do it until the end of the month. And those are going to be replays live for our community members in our paid group. And it is an upgrade that you unlock. So if you're an annual member, you get all those. Guys, somebody do me a huge favor. Just post the link. Oh, wait, I can chat. Never mind. Hold on. Let me put this in here. I'm going to post the link to our group, and then I'm going to show you what would have happened had you traded Crazy Horse today. Okay. So let me get over here and get the link. By the way, challenge group, this is the free group on School, has back testing where you can see me use this indicator and everything else, okay? So this is a free group. Free group. Okay, and then I'm going to pin that message. There you go. So if you want to come in, check it out. It is free. Once again, like you're kind of dumb if you don't join because there's so much value in there. It wouldn't make any sense. But anyways, let me show you what would have happened if you're an idiot. You don't join, you're a moron. No, I'm just kidding. But no, there's a lot of good value in there. Yeah, so this is what would have happened, right? So the first thing that we did this morning was we took this 5-minute break. We got it just on a little tiny pullback right there. And yeah, that's about right. I think it was about, I want to say it was maybe a little less, like 39 points, maybe something like that. But you see how easy that was just throwing this up here and going with it? That's because what we do is we use, and I didn't even really do this, but we use the automatic, this little A in TradingView. It keeps all of your charts in view, right? Like this, right? So when you use this tool to go long or short, it actually accounts for the volume, like the distance, the volume on the chart. It's pretty cool. So that was an easy win. We took that this morning with the live crew. It gave it to us nice and easy. That was really very little drawdown. It was a dynamic play. So what does that mean? If price would have gone against us, we would have not closed out the trade, and we would have definitely seen price down in this area, maybe the outer band or middle band. We possibly could have added to our position. That does increase your exposure, but the whole point of what we're teaching is to show people how to actually trade using what I call just responsible risk management, like as an adult, not trying to get like 5-to-1 risk to reward every single trade. I think that's just how you're going to keep losing. It's just not feasible for pretty much any trader. But anyways, we're kind of trading more like the banks do, more like hedge funds do, rather than retail. Here's another trading position that you could take using this strategy today. So even if you did a 1-to-1 without trailing, I know I saw somebody in chat, I think it was Zach, talk about how you didn't trail right. I thought you trailed just fine, bro. I think that's fine. Like we even trailed this morning, and I don't remember exactly where we got. I think it was like 37 points, something like this. something like that. I think our stop was a little tighter as well. But regardless, I think you did it right. And this is another area where the second trade of the day, if you're already up, right, you set a break even stop, like right there, right when you get in. And look, now you just use the shelf method, right? And you could go down to like the 1 minute time frame in here and use the shelf method on your way up. This would have worked perfectly. You would have actually been out. I mean, you would have been out like up here, man. This would have given you a trade right. If you just use the shelf method, just depending somewhere up here, right? So you're getting like a 2R, somewhere around a 2R. So that would have been like 3 Rs for the day. And then let's go back to the 5 and look and see, was there another play? Well, I mean, I don't know about you guys, is it wrong for me to kind of be a little biased today and say, hey man, why would you take a trade when we have news coming up right here? But I mean, I guess this is a trade that you could have taken based on the strategy. It's just, I'm so clear when I tell you guys, like, just the news, man. Like, why would you trade? Like, and you're especially not going to trade right here. Come on. Like, that's not fair. So these positions that I'm putting up here aren't even like, I'm trying to tell you not to trade during these times because things like this, see that liquidity wick? It's just like, oh, it hunted your stop. No, you're just stupid because you traded during news. Like, come on, man. I don't know what to tell you. Don't take that trade. This trade, why would you even do it? You're up 3R for the day. Why would you even do that? It doesn't make no sense, man. It doesn't make any sense. It wouldn't make any sense to me why you would take that trade. So, I mean, when I'm back testing, I don't see the news. You know what I'm saying? I don't, that's why I said you should be even better. Like you should actually have a better P&L forward testing. And it's so funny because a lot of people go, oh man, it's easy to win back tests. Oh, really? Okay. Well, show me 1,500 trades with a 78% win rate like I have, doing it live. Like literally show me that you did it and I'll believe you. I'll believe you if you show me. But the reality is, I don't think a lot of people can do that. And then we default to this kind of notion that like, okay, hold on, it's all about the win rate. No, that's not what I'm saying. It's not about the win rate. It's about money management. There's a lot of break-even stops that I take. A lot. I mean, there's a lot. When we did the back test, I didn't do a whole lot of break-even stops because I just want to see one-to-one. I'm really trying to show you like how we can use dynamic money management. That was the whole point. And that's why you're not seeing a whole lot of like break-evens, right? But reality is like today's trade, I told you before I got into it exactly what was happening. And then we set that break-even stop when we were about halfway, one-to-one. Halfway up from a 1-to-1, we set a break-even stop, right? So, I just think like these kind of things, if you can see those ahead of time, you're going to have a better result. The indicator on the chart is called, it's kind of like Bollinger Bands a little bit. Yeah. It's just custom indicator. I took an indicator. It's a funny story actually, but I took an indicator kind of random and then tweaked it and I really liked it. And then I thought, okay, hold on, let me combine this. And it just ends up being so gangster. And so I just relabeled it, named it. I got someone to like help me create the indicator on my own. And it's just like my custom settings for this other indicator that was out there. And we call it the TMT Crazy Horse Bands because it's the orb Crazy Horse strategy. There's a strategy called the opening breakout range, the opening range breakout, the orb, right? ORB. And so a lot of guys are like talking about this when like it was only a couple months ago that I started really showing it, like beginning of January, something like that. Nobody was talking about it. Now it's everywhere. Like I can't, and maybe it's just cause YouTube knows what I've watched. I don't know, but it seems like it's everywhere now. But yeah, like, basically, we're not just trading the breakout. We're waiting for some confirmations. I'm taking other elements of what we were teaching. And I'm a momentum trader, right? So this indicator, the center line, that's equilibrium. There's a lot of synergy between, moving averages, equilibriums, you can call it VWAP, right? And price action. There's a lot of synergy there. Now, you go down the road of like ICT or even like smart money concepts, you can get really technical with liquidity zones, fair value gaps, inverted fair value gaps, right? I'm not like belittling that stuff. I'm simply I'm degressing. I'm going back to like a 5-year-old and saying, what is equilibrium? If price gets there and we broke the high of the 15-minute range and we close candle bodies above it, where do you think momentum is for the day? Like, it's very base. It's like rudimentary thinking, and it just works, man. I don't know what to tell you. Does it work, guys? Somebody tell me, does it work? I mean, shit, I think the proof is in the pudding. I had one red day in 2025, and that was this last Monday. Market's been really difficult, but I mean, yes, it freaking works. It's not about does it work. It's more about what trades you take and what trades you don't. Like, think of your favorite strategy, whatever you're trading right now. And this is a tough thing because I think a lot of people get upset when I say this, but there's a lot of strategies that work, in my opinion. It's just what trade setups are you taking, right? That's the key. That's the key. You guys there? You good? Hola, hola. Hello. Okay. I'm just making sure. Yeah. So, I mean, yeah, I think the, I think the question of whether it works, there's a lot of trading strategies that work. It's which setups you're going to take. That's the question, man. You know, that's the question. And that then it comes down to, well, then shit, it's not mechanical. Yeah, sure, it's mechanical. Every good strategy has a checklist. Every good strategy has a checklist. And what I've noticed is that if you try to take every, like, you know, let's talk about IFVGs, inverted fair value gaps. You guys know Ryan, right? Dodgy, Double D. Okay, well, he's a pretty big content creator and YouTuber and funded trader, and has kind of proven that, like, he can trade his ass off, dude. The kid can fucking trade. I don't care what you say. He can trade. But does he take every single IFVG setup? No. There's like certain ones he doesn't take, and there's a reason for that. And unless you know that, it's like at the end of the day, you're just going to be sitting here scratching your head, right? You're going to go, oh, I don't know why I'm losing. Well, do you take okay, here's a better example. Everybody kind of knows structure to some degree. Do you take every single market structure break? Do you take that and trade it? Yes or no? Okay, there you go. Do you take every liquidity grab and just trade it in the opposite direction? No. So, I mean, the proof is there, man. Like, you know what I mean? Yeah, everything needs context. That's right. It's exactly right. So you got to kind of look at the overall picture. Like when I zoom out on this 5, it's like we're in upward structure. The momentum is sort of up. I would not be surprised if we break higher, right? This does not look like a breakdown to me. This looks like a nice little trend overnight, just small, just the market's a little like, well, I don't know what's going on. I got to wait for Jerome Powell to speak, but we think we're going to go up, right? The economic report comes out. It's as expected. There's 2 rate cuts instead of 3. That's not great. So you see Bitcoin go, oh, shnikes, and it pulls back. That makes sense. Bitcoin pulled back a little bit. Now it's like kind of recovering. So here we go. Let me go down to the 5. So it kind of pulled back. Now it's kind of recovering. I mean, like, it just makes sense. The hesitation makes sense. But, you know, I'm seeing the dollar drop. I mean, I'm seeing like across the board, look at the VIX. The VIX did jump off a cliff. So there you go. Now it's official. Now you have candle bodies closing out here. We have way more probability to just go up. Do we have liquidity targets above us? Of course we do. There's tons of liquidity above us, man. We haven't even retested the 200-day moving average. You know, so when I take a look at this indicator and I go back to being 5 years old, it's like, what direction is the indicator? Where are the waves going? And it's like, oh shit, they're going up, you know? And so I don't know what happened to, let's see, what happened to Meet Kevin? Is he going to be up here covering Jerome Peasy? All right, here he is.
Point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas.
Okay, that's a continuation
Trade,
model right here.
immigration,
So
fiscal
there is a
policy, and
possibility
regulation.
to, if you were like
It is the net
crazy
effect
brave,
of these
there's an
policy changes
FEG,
that
there's
will
a
matter for
breaker,
the economy
there's a
and
shelf,
for the
lots
path
of
of monetary policy.
lots of things saying that this could
While there have
easily
been
give you
recent
like 10
developments in
points
some
for
of
the
these
upside.
areas, especially trade
Here's 10
policy,
points. Let me line out
uncertainty
10
around
points.
the changes and their effects on
Easily
the
give you
economic
10 points to the
outlook
upside
is
right
high.
there.
As we parse the incoming
I'm not taking it,
information,
but I'm just showing you
we're
ideas.
focused on separating the signal
There's your
from the
10
noise
points.
as the outlook evolves.
There you go.
As we say in our statement, in considering the extent and timing of additional adjustments to the target
Like
range
if you
for the
know
federal
this
funds
model,
rate,
you already should have
the
had
committee
that.
will assess
You know, if you're in the
incoming
school
data,
group, you
the
should be lining
evolving
that
outlook,
stuff out.
and the balance
I'm
of
doing it
risks.
kind of late, but I see it.
We do not need to be in a hurry to adjust our policy stance, and we are well positioned.
Now it's like, okay,
to
break
wait
even,
for
stop. Let's
greater
see how much you can
clarity.
get out of that, right? Continuation will bring you way up
In
here.
our SEP,
right?
FOMC
Breaking the
participants
highs.
wrote down their individual assessments of an
And,
appropriate
yeah,
path
never
for the
mind my
federal
stop
funds
loss
rate
there. Sorry,
based on
but
what
it
each
would be,
participant judges
you know,
to be
you
the
would take
most
the
likely
FEG, you
scenario
would protect
going
yourself with the
forward.
first
Tell me
fair
about the
value
bear.
gap.
An admittedly
Or
challenging
underneath the breaker.
exercise at this time.
It's in a lot of
light
videos that I
considerable
post.
uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end
Everything
of this
still
year
looks to the
and
upside.
3.4% at the end of next year, unchanged from December.
VIX
While
is
these
still
individual
dropping
forecasts are always
4.1%.
subject to
That's nice.
uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision.
That's dovish.
Policy is not on a preset course.
Unusually elevated.
As the
Like,
economy
what are y'all
evolves,
freaking
we
out
will
over,
adjust
basically?
our policy stance in a manner that best promotes our maximum
I mean,
employment
everything's pointing
and
up,
price
guys.
stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%,
Yeah,
we
one
can
strap for
maintain
life.
policy
That's not a
restraint
one strap for life,
longer.
baby, but I love
If
it.
the labor market were to weaken unexpectedly,
It's just
or
the
inflation were to
pattern.
fall more quickly
But
than
remember, there was no
anticipated,
high time
we can
frame
ease
grab right
policy
here. But I like it.
accordingly.
I still like it. You caught it
Our
off of a
current
shelf.
policy stance
That's what you
is
caught it
well
off of.
positioned to deal with the risks
Shelf king,
and
baby.
uncertainties that
Shelf
we
king.
face in pursuing both sides of our dual mandate.
Yeah, there's still no high time frame.
At today's
grab.
meeting, we also decided to slow the pace of
You caught off
decline
a
in our
shelf.
balance sheet. Since
You're the
we
shelf
began
king
balance
now,
sheet
Nick.
runoff, our securities
You and me,
holdings have
baby.
declined by more than $2 trillion.
Oh, different
While
trade.
market
okay.
indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving
the
the
free
cap
school
on
group and
agency
find out.
securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include
DXY
outreach
dropping like
and
a
public
fly.
events involving
Gold
a wide range of
pumping up
parties,
is weird.
including
I got to
Fed
tell you,
listens
that is
events
a
around the
weird thing
country
to have
and a
happen
research
right now.
conference
That's very
in May.
strange. I don't get that.
Throughout this process,
That's
we will be
blowing my
open to new
freaking mind.
ideas and critical
Look at the
feedback,
10-year dropping. What
and
is
we will
going
take on
on?
board
Whoa.
lessons of the last 5 years
Whoa, whoa,
in
whoa,
determining
whoa.
our findings. We intend to wrap up the review by late summer.
Dropping. This means people are
The
buying
Fed
bonds.
has been assigned 2 goals
That's
for monetary
wild.
policy: maximum employment and stable
that usually
prices.
is a pretty
We
bearish
remain
sign.
committed to
So
supporting
we have
maximum
bullish,
employment, bringing inflation
bearish,
sustainably to our
bearish,
2% goal, and
Bitcoin,
keeping longer-term inflation
neutral,
expectations
and
well
the VIX
anchored.
dropping bullish.
Okay.
Pretty
Our
neutral.
success
across
in
the board.
delivering on these goals matters to all Americans.
Totally neutral.
We
man.
understand that our actions affect communities, families, and businesses across the country.
Our momentum is up
Everything we
to the
do
upside.
is in service
Look,
to our public
momentum.
mission. We at the Fed will
Right,
do everything
momentum.
we can to achieve
So
our
that's when
maximum
I say
employment
our
and price
momentum is
stability
up.
goals.
That doesn't mean like
Thank you. I will look
we're
forward to your
breaking out.
questions.
Okay,
Momentum is up.
pretty benign.
Yeah,
pretty
benign.
benign.
I told you it's gonna be
Nothing
benign.
there. A lot of
Howard
uncertainty
Schneider,
talk.
Reuters. Thanks for your time.
Yeah, it's gonna
So,
be whatever. That's what it's
two
gonna
things
be.
on sort of the real side here, inflation and then GDP. How much of the
Manipulation?
higher
I think
inflation,
so, man. Could
forecast
be.
for this year is due to tariffs.
It could be,
and
dude. I don't
since
know.
the policy path.
Ooh,
remains,
he said the T word.
are you effectively reading
He said the
this
T word.
as
Let's see if we get a
one-time
dip.
sucks.
price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is
At the
coming
worst,
from
this would have been a
tariffs and
break-even
from
trade. At the best, you could
other-
have caught
and that's
10,
already
20,
the
15
case.
points.
You may have seen that
So, good job,
goods
Taylor, you
inflation
picked that.
moved up pretty significantly in the first
T
2 months
word,
of the
look,
year.
the T word.
Trying to track that back to actual
Yikes.
tariff increases, given what was tariffed and what was not.
careful,
very,
guys.
very challenging. So
Things are
some of
looking
it, the
more
answer
neutral
is
now, but
clearly some of it. A good
Still
part of it
momentum to the upside, but
is coming from
what I see
tariffs,
over here-
but, we'll be working, and so will other forecasters, to try to find the best possible
It's
way
weird,
to
man.
separate non-tariff
Look at gold.
inflation from tariff inflation.
Wow.
In terms of your sort of looking through
It's not
question,
really that big of a deal. 14
too soon to
point-
say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action
Transitory?
by us, if it's transitory. And that can be the
That's
case
funny.
in the case of
said
of tariff inflation. I think that would depend
Good
on
job, Kev.
the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored.
So this could be
Longer-term
bonds
inflation
being sold?
expectations being well anchored.
Well, I
Which
guess I'm
means
looking at the
transferring
out years
from
here,
bonds
the fact
into
that
where?
policy
Money
path
markets, right?
Doesn't change at all.
I mean,
and
you could look at it that
inflation
way
is
too. I just don't. I
unchanged
can't
in the out
explain
years
gold right now.
Also,
I don't know.
Doesn't that imply you all have
weird.
basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case. But as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment.
All right, guys, let's get the likes going. We already got one little trade off the deck right here. The deck, the shelf, that is. We got 62 people and not enough likes. So
Thank
maybe
you, Colby Smith with the New
you
York
guys-
Times. You
do you
just
think?
described
Are we
inflation
done?
expectations as
Should
well.
we try to find
anchored,
another
but
setup?
Has your confidence
Let's
in
go.
that
Let's get those likes
That's
going.
the Blondie replacement.
measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor.
Every time you
inflation
hear the word
expectations
tariff,
very,
yeah,
very
that's a good
carefully,
one, Jacob,
basically
that's good.
Every
That's
source
good
we can
strategy,
find,
actually.
short-term,
That's
long-term, households, businesses, forecasters,
Yeah,
market.
ever since he said the
and
T
I think
word,
the picture broadly is this: you do see
Unreal.
increases
Okay,
widely
deleting the
in
shelf,
short-term
that already
inflation
played out.
expectations, and people who fill out surveys and answer, questionnaires are pointing to tariffs about that. If you look
Damn, he said it
in
again.
the survey world, if
Here we
you
go.
look
Higher high,
a
higher
little
low,
further
higher high.
out,
We're looking for this to get
you
broken down
really-
here in a
you
very
really
low
don't
time
see,
frame.
much in the
That
way of
would
an
change
increase.
momentum a
Longer
little.
term
Right.
inflation expectations are mostly well anchored. If you look at the New York, for example,
Everything going sideways.
Then you have market based, and it's the same pattern. People in markets.
Yeah,
are
there you
pricing
go.
in
Yeah,
in
like it up, baby.
break-evens.
Yeah, hit that like
Some
button,
higher
baby.
inflation over the next year must be related to tariffs. We know from the surveys. But if you look out 5 years or the 5-year forward,
Do
you'll
it
see
again.
that,
You already hit the like button.
that
Do it again.
break-evens
I'm
are
kidding.
either flat or actually slightly down in the case of the longer term one. So we look at that, and we will be watching all of it very, very carefully.
He's now actively defending the transitory
At the
argument.
very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration.
I mean, Meet Kevin has
and to what
1.6 thousand
extent
likes.
It could be a leading indicator
What's
for
the difference
hard data.
between he and I, huh? I have better hair.
Let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit,
man.
consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation most recently has been at
he has a
healthy
coupon
level.
code that's expiring.
Inflation
That's right.
has started to move up now, we think partly in response to tariffs, and there may be delay in
What the
further
heck, man?
progress over the
Yeah, it
course
only
of
has
this year.
13.
So that's the hard data.
Damn.
Overall, it's a solid picture.
Y'all act like I ain't been winning every day.
Both household and businesses
You've been winning
show
with me. What the heck, man?
significant rise in uncertainty and significant concerns about downside risks.
We
So how
got to
do we
win
think about
more.
that?
We
And
got to
that's-
win
that
bigger,
is the
Mike.
question.
You don't understand. It's
As I
got to go
mentioned
big or
the
go
other
home,
day, as you
Mike.
pointed out, the
You
relationship
got to put your
between survey
reputation on the
data
line
and
and do
actual
this shit.
economic
Let's
activity
go.
hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the
We gotta
economy
win
and
bigger,
then
don't
going
we?
out and buying a new
All
car. But we
That's what
don't
we gotta
know
do, baby.
that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will. But given where we are, we think our policy's in a good place to react to what comes, and we think the right thing to do is to wait here for greater clarity about what the economy is doing.
Pretty much what I said this morning.
This is weird.
Tim
I've
Rose,
never
Wall Street
heard
Journal.
him. I've never heard him discount the surveys before, like the PMIs, the S&Ps, or all that. I've never heard him go that discounting.
Materially enter into the decisions of households and firms.
All right, finally breaking that high. Might get another shelf here. Like I said,
It's their mic problem.
You see by
like I said, momentum's still kind of sideways. Ooh, gold popping to all-time high.
Consumers, at least in
Wow.
the short run, expect higher
Huge
inflation.
bullish gold. I mean, this is
So
it doesn't
I
make
do
sense. Bro.
like that definition.
I
a lot.
cannot
In
be
fact, I
buying
used it
equities right now.
at the
There's no
recent
way.
conference where I spoke.
This is so.
I think a world
you
where,
got the
where
VIX
people can
falling
make
off
their
of a
daily
cliff.
economic decisions
Look at
and
this.
businesses.
The VIX
and
is
they're
about
not
to break this
having
low.
to
It
think
did break the
about
low. It's
the
about to
possibility
close
of
underneath that
significantly
low.
high inflation. We know
Wow,
inflation will bounce
huge
around.
move on the VIX.
That is price stability.
The dollar
I
falling.
think we were
this is
getting
bullish.
closer and closer
That's a bullish
to
sign.
that.
I don't know
wouldn't
why
say
gold's
we were at
spiking.
that.
I really don't.
The
You got the
inflation was
10-year
running around
dropping like a
2.5%
fly, man.
for some time.
I think
I do
bonds are
think
being
with
sold
the
to put into
arrival
equities.
of,
That's only
of the tariff inflation.
I mean,
Further progress may
it's
be
just we don't
delayed.
have a
The
real
S&P
crazy
doesn't really
breakouts. I'm
show
not saying like
further
we're
downward
mooning right
progress
now.
on
Don't get me
inflation this
don't get me
year,
wrong.
and that's
Okay?
really due to the
But
tariffs coming in.
how can I explain that?
So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the S&P for 2025?
So again, people wrote down two cuts the last time, and they look at the
Markets think 3.
They wrote down meaningful decline in growth from 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3, and so those kind of balance each other out. So people, not everybody, but on balance, people wrote down similar
bots.
numbers. The changes aren't that big.
The
The other factor, though,
Tell you
as I
what,
mentioned,
those
is
damn
just
bots.
really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy's in a good place. We think it's a good place where we can move in the direction where we need to. But
Yield curve
in the
steepening.
meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
While the next person asks quickly, look, the yield curve down 6 basis points on the 2-year, only down 2.7 on the 10-year. That's a yield curve steepening, a little more in the direction potentially of recession evaluation. And remember the Meet Kevin memberships at meetkevin.com.
Oh,
you
shut
get
up, Meet
everything I
Kevin.
have to offer, including the Alpha Report,
up,
every
shut
private
up,
course
shut
member
up.
market open live stream, all the courses, every trade alert, everything
knows.
for less than $1.70 a day. Check it out.
All right, quiet. I'm muting you.
Pretty high participation, accounting for aging. You've got wages that are consistent with
All right,
2%
looking
inflation,
in here
assuming that
at
we're going to
Grok,
keep getting
right? We put in the chart.
relatively high
we take a picture of the
productivity.
charts.
You've got
we put it in
unemployment
here. I want to
pretty
see what
close to its
Grok
natural
thinks,
level.
the conclusion of
But
what direction the Nasdaq
the
should
hiring
go
rate is
based
low,
on.
but
what
so
I-
is the
what I
layoff
gave
rate.
it.
So
See here.
you look at initial claims or layoffs.
Look at this.
So you're not seeing
The
people
Nasdaq
losing
is
their
more
jobs,
likely to
but you're
move
seeing that people who
downward
don't
or
have a job
consolidate
having to
in the
wait
near
longer
term.
and longer.
Due to
And
this resistance,
the question is which way does that break?
rising
If
bond
we
yields
were
and
to
then the
see
tightening of
a meaningful increase in layoffs, then that would probably
DXY
translate fairly
weakening, VIX
quickly
remains
into
subdued,
unemployment
Nasdaq
because
finds
people are,
support. Well, that's
it's
what I
not
just
a
gave you
big
the picture,
hiring
bro.
market.
Yep.
We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for
I'm gonna try
for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other?
In labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
Bingo.
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are, they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area, but at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more.
You came back from the library. Did you like the library?
We've had two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and very, very hard to capture. Because so much of it is indirect.
Okay.
A great example
let me see,
is
because I'm doing a live stream, buddy.
Washing machines were
just-
tariffed in the
you,
last round of tariffs, and prices went
I
up.
need
But prices also
a
went
red
up
recording
on,
thing
on,
outside
on
the door
dryers,
when I'm live.
which were not tariffed.
So I'm live.
So the manufacturers just, they just kind of followed the
Yeah,
crowd
it's
and
okay.
raised it. So
Fine.
things happen very indirectly.
Wow, that's
And
a cool
so there'll be a
dinosaur
lot of
book.
work
I'll read
done
it to you
in
tonight,
coming
okay?
months to try to trace all that through. But
Okay.
ultimately, though, it's too soon to be seeing significant effects in
help me?
economic data.
Hello. I'll read it to you tonight, buddy.
Here's the bingo card, just in case you wanted
Hold
to
on,
see
sweetheart.
that really quickly, what I got so far.
Transitory price increases from tariffs are the base case. Transitory is the base case.
Okay.
Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time?
Focus, okay?
And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else?
Okay.
And
Take
so
that
I'm
outside,
just
bud.
wondering why the 9 aren't taking that on board and are
I'll read
cutting
it to you when I'm done.
twice
Okay.
this year.
When you say last time, are you talking about the last
Pandemic, yes, during the
Because you
pandemic.
could have been talking about the last time there were tariffs, in which case the inflation was transitory.
Oh,
Yeah, no, of course we're well aware of that, and it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the
Kids,
right policy
gotta love
to tighten policy, because
okay,
by the
so-
time you have your effect, you're in effect
Put Kevin in
by
timeout.
design, you are lowering economic activity.
Yeah,
and
momentum's still to
employment.
the upside
But
right
if that's
now,
not
still
necessary,
to
you
the
don't want to
upside.
do
I
it.
mean,
In real time, as we know, it's hard to
nothing's
make
really
that
changed.
judgment.
We're taking a look on these lower
and
time
we're
frames
well
just to
aware,
see,
of what
took a W
happened,
off the
obviously,
shelf.
with the
Gracias, Mike.
pandemic
Nice,
inflation.
brother. Nice.
But I mean, we
Good
have to
stuff,
look at
bro.
this as
Love hearing that, Tyler.
As a
My
different
man,
situation.
choosing
There are
your
differences and
battles, right?
similarities.
Choosing your
I mean,
battles.
it's a different time.
And then
We
protect,
haven't had
protect,
real
protect.
price
That was
stability
good.
Protect.
fully
Okay?
It's a good comeback.
reestablished yet, and we
Don't
have
let
to keep
these
that in
markets
mind.
get the best
And,
of you, man. Protect your downside.
You know,
Soon
we
as
also
get into
have we hear
profit,
that people are very reluctant to take
if you're
on.
in any, and it's
you know,
based
to-
off the
to
shelf
allow
method. Use that
prices to go
shelf
up.
method.
At the same time, we
you
hear
know?
that businesses are intending to
Really
pass
use
many
it,
of these
man.
prices
I'm
through.
telling you,
So
it's
it's hard to
powerful
say how
stuff.
this is going to work out.
Yeah, sniper entry. Let's freaking go, bro. I love that. Love hearing that, man.
Steve
I like
Leishman,
Top Step.
CNBC.
Nothing
Thanks for taking
wrong
my
with
question,
Top
Mr.
Step.
Chairman.
It's good.
The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation.
They got me Chick-fil-A.
I wonder if
too.
that kind of reflects your own sense of prioritization.
There's only
faced with
27
higher prices
ingredients in their chicken.
And weaker growth.
Not a
that
big
the
deal.
idea is you have to take care of inflation.
You know, so we have two goals, right? We have maximum employment and price stability, and we have to balance those. And there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging, situation
Tyler, was this
for any
was
central
this the
bank, and
shelf?
certainly for us.
Right here?
And so what we say that we'll do is we're
using the upper shelf or the
each
middle
of those
shelf?
two goals is each of those two
kinda
measures is from its goal, and
Just
then we'll
curious.
ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know
Okay,
any
breaking
mainstream
higher.
forecasts that really show significant problems like that.
Wow,
So-
nice break higher. What's going on?
Just to follow up,
what do you say?
yesterday,
Anything?
the UCLA
Market's just
Anderson
wanting to go up
forecast
and
said
tap my shelf on a higher
there,
time frame.
high probability
All right,
of recession. Where
70%
did you
chance
stand
that we
on
go up,
whether or not the
right?
slowdown you're
And
seeing
now
creates a higher
we're really,
probability
really,
of
really
recession
looking
you may
good.
have on recession? Thank you.
The
You know,
VIX.
there's always an
let's see,
unconditional
20,
probability,
20, under 20.
possibility
The
of
VIX
of a
under 20.
recession.
Yeah, that is
It might
good. That
be
is a very
broadly in
good
the
sign.
range of
You're
1
absolutely
in
right.
4
Under 20 is
at
a good
any
sign.
time.
We got
If you
another
look back
shelf
through the
using the
years,
shelf method
there
to
could
just
be within
climb
12
here
months a 1 in
up
4
the
chance of a
ladder.
recession.
Man,
So the
you
question
guys.
is whether that
Wow,
whether this current situation
This is good.
those
Momentum still to the
possibilities are
upside. We can
elevated.
continue.
I will say this. We don't make such a forecast. If you look at outside forecasts,
We could
forecasters
continue.
have
One of these shelves
generally
will get
raised-
broken.
A number of
so
them have raised
be
their
careful. As soon as he
possibility
steps
of
off
a-
stage,
of a recession.
we'll see.
Somewhat.
I don't
but
know if the
still at
market's going to
relatively
turn or
moderate
not.
Levels.
We're gonna
Still
have to
in the
wait and
region
see,
of
but
the
everything is looking
traditional,
pretty
they were
damn good.
extremely low. If you go back 2 months,
Pretty
people were
good.
saying that the likelihood of a
We got a
recession was
230
extremely
pump.
low.
We can
So
keep going
has moved
easily
up, but
all
it's
night.
not high.
Asia, London, keep pumping. We could. I'm telling you. It could happen.
Hi, thank you. Chris Rugaber at Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could
Cut 'em off.
cause the kind
Not
of
my job.
fight
Just come
about
on,
the
dude. Don't
administration's power to
politicize
fire
this.
independent people. If those firings stand, is that a threat to the Fed's independence?
Oh, my God.
Could he do the same thing to the
Idiot.
Fed board?
This guy's an idiot.
So I think I did answer that question in this very room some time ago, and I
All right, so here
no
we
desire
go.
to change that answer.
Fair
and I have
value gap,
nothing,
1 minute
new
time
for you
frame,
on that
overlapping
today.
the shelf. You've got 2
Well, I'd say
really
that's the
solid
cutoff.
points right here.
Maybe I'll have another mulligan. As you
Cut
know,
off.
I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey.
way I would be setting
In
this
the
trade
summer
up
of
is cheap.
2022, you cited the
I would
rise
set this trade up cheap. I
in
put a
the
little bit
long-term
more of
inflation
a stop
expectations
loss,
in that index
and I just
as
say
the
if
reason that you
if
went
this
big with a
candle
3/4
closes
point
below the
So I know
FEG, I'm
you've
out.
talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm
Again,
just
you're buying at the
wondering,
highs.
Are you dismissing
You're,
that?
you know, you're in the
what we
premium
saw
on the
last week
day.
from the University
That
of
doesn't mean
Michigan,
you're in the
or
premium on a higher time
does that
frame.
carry the same weight as it did
And you're
in the
pretty much
past?
always inside of a
So
higher time frame.
I mentioned
pretty
it
much.
back then, but in no
Unless
way
you're at the
did I
all-time highs.
place a huge weight on
So-
it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so
Okay,
it's
see how this candle opened?
It's also
Kind of
this
opened a
is
little
the-
bit
that
weak,
Michigan, the one you're referring
bouncing
to,
from
the
here,
longer-term
boom.
thing.
You're instantly
You know,
right
we
here.
look at it. We don't dismiss data.
As soon as you
that we
get
don't like.
510 right
we-
there, I mean,
we
I'm
force
breaking
ourselves to
right
look
there.
at it, but it
I
is
don't
an
care.
outlier
That comes back
compared
down,
to
grabs me. I don't care.
market-based and
It had
compared to
enough
other
time to form.
survey-based,
It's got the wick. It's got
assessments
everything
of
that
longer
now I'm just taking my
run
stop loss.
inflation
And if
expectations.
I'm
So
on
we
a,
gotta keep that in mind.
you know, if I'm on a
And,
funded account, I'm up
again,
here. I mean, I'm right underneath that.
I would
bit,
just say
right here.
we look at
Just
all
keep-
of them.
just-
and,
she could
that
tag
was
me
kind
out,
of an
but
outlier, but
whatever. I'm just right
nonetheless,
underneath it.
we take notice.
I
of
want
it.
her to push or I'm out. Now that's funded. If I'm not on a funded, I'm at break
Michael
even.
McKee
I'm
for
looking for
Bloomberg
a leg
Radio
higher.
Television. There's a worry,
And
on
this
Wall
is pretty
Street that
good.
when
I
you
might
say
even
you
take that.
want to
I might even take the
study
stop loss
the
up
net
to the bottom of
effect
this candle.
the fiscal
She's
policies
taking
we
a
may
long
see
time to
on
break,
the
right?
economy that you would
She
end up
should go.
waiting
If
too
we're gonna
long
go, we're gonna go.
and be behind
Bottom
the
open
curve
low
in
first.
responding to
Open
any
down. I want the bottom
downturn.
wick.
How can
Thank
you
you. Good.
reassure
Now go.
people
I don't need that much of a
you
bottom
can
wick. Just something.
spot a problem
And now
early
leg
enough?
higher.
We're going to evolve
Entry.
in the time frames and all that, and we
Just
will
saying.
use our tools to
Just
foster
saying.
achievement of our goals.
Look at
to
Bitcoin
the
breaking
best we
higher.
can.
Oh shit! Did this just
And,
happen?
Of course, we're
Oh,
going to try to
shit.
be timely
Wow.
with
Where
that.
have I been?
For right now,
Changed
the
so
hard
fast,
data
man.
are pretty solid.
Jesus.
We
crazy.
are
Why is
obviously
gold up
aware
here,
of the
though?
soft
That's freaking
sentiment
weird.
data and high uncertainty.
Go down.
And we're watching that
Gold,
carefully, and
like,
we
go
think
away.
it's a good time for us to wait
Crazy
for further
horses is on
clarity
fire, yeah, I
before
know.
we consider
Crazy Horse
adjusting
is
our
on fire,
policy
bro.
stance.
Do you think it's going to be hard
Okay,
to
that was a
get
good
clarity
exit
in
right
the
there. That was a
government by
perfect
tweet?
exit.
I mean, do you
I mean, it
have
couldn't get
a
any-
feeling that
any
at some
better.
point you actually will
I mean,
have
entry. I
a
said exit.
forecast
My
you can
bad.
trust?
Entry is what I meant.
Yes, I think we will.
So now you're just like,
it's
you're
hard
just
to say when
trailing,
that
right?
will
You
be.
know that this is going to be your shelf
You know,
right
we're
here.
these decisions are going to be made.
Let me mark
and
that
they're
out.
going to be implemented, and then we'll know.
Price should respect the
We'll know
shelf,
what the
or
decisions are, and
she's
we'll have
going
to
to
make
come back
assessments
down.
then about the implications.
And if she
for
just
the
goes,
economy.
if she's like
Those
out of
things
here,
will
out of here,
happen. A lot
then
of them will
just
happen
trail
over the
tight.
course of,
So you got
incoming
Bitcoin,
months, certainly over the course of this
Bitcoin's
year.
out.
And
Bitcoin's
we'll
out
be
here. You might be
adapting
right,
as we go.
90K. You might be right, dude. You might be right. Damn, 70% chance that we
Hi, Chair
went
Powell.
up.
Rachel Siegel from the Washington Post. Thank you for taking our
We're
questions.
getting very close to like
At the beginning,
the
you were
decision
talking
is
about
we're going up.
separating the signal from
And,
the
like,
noise,
up,
and tariff
right?
inflation from non-tariff
Like, at least-
inflation. Can you walk us through what that looked like over the
Yeah,
last
back to
couple
the
of
200
months?
is
If there were
430
specifics from
points.
the January
Oh
meeting to now that
shit!
helped you make those
430
decisions?
points. I
So
will
when we say
gladly
separating
take
the
that.
signal
I
from
will
the noise,
gladly take that.
That's just a way of
Gladly.
saying that things are highly uncertain.
I will
and
gladly
that,
take that.
You know, you're
430
reading about
points to
developments.
to
The news is
200,
full of developments
and then
of
you
tariffs
gotta
being
just
put on and
imagine there's
taken
going
off
to be
and things
sellers
like
right
that.
there.
That's,
for sure.
Some of that is noise in the sense that
we're gonna have,
it's not really
some
telling
maybe
you
Tom Lee was
anything.
right, man.
You're trying to extract a signal from that, and the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those
Okay,
things. So-
now price is
so that's
pushing
really when we
pretty
say signal and noise.
dramatically.
Sorry,
So
the
you have
second
an
thing
you have a
was-
choice.
Or
If you
similarly
wait for price to
tariff
come back, you're
inflation,
going to give
non-tariff
up
inflation,
quite a
ways
lot
that
of
you're
points
making
here.
That's sort of a
You're going to
special
give up
case
about
of that.
well, not
You know,
too many,
the
20
idea
points or
being-
so. It just kind of depends on where you're
and
at.
I think,
If
do
you
think
put your
that the
stop
first
loss
2
on the
months of
shelf,
this
you're
year
most
are a
likely going to
great
get tagged.
example. You've got high
You should be like
readings
right in the
for
middle
goods
right here.
inflation after a
Is what I
string
teach. Like
of,
consolidation's
readings that
very
average
thin.
close to zero. And you
So
have
you're
to
either going to
ask,
trail
it's
tight and
coming
get the
during
max
tariffs, but
value,
you know,
which is
you can't-
fine.
It's very
just
hard
a
to
lot of traders,
actually
they just don't know how to
scientifically
let
go back
price
and match
breathe.
up
So
those
I'm trying to show
increases
you,
and say,
just leave your
yes,
stop loss
I can
down here
prove that that's
and
from
relax.
tariffs, but it kind of has to
Right?
be to
Just
some
relax,
extent.
man.
Plus noise.
Let it
There can
breathe.
be
Don't take your win too
idiosyncratic
soon.
readings in
right?
various
Let that
categories,
sucker
which will
breathe.
shortly reverse.
You'll
So
be
that
so
happens
happy you
too,
did
and that
it.
could
If you
be
just do this a
big
couple
piece of it. You know, I
times in
think
your
we'll know
trading,
in a couple of months.
you'll be
we'll
so
know whether
happy. And
those
then the
were,
times where you
you know,
just
where
you
that
don't
really
take
was
the
from.
profit up
That's
here,
another case where
you're
I
going to
think it's
remember
going
those
to be
way more.
Very, very challenging.
You're going to remember
to
those way more. I
unpack
promise. But then
the
once you do this a
inflation that
few
we
times,
see
you're going to
over the
remember
course of
these
this
more,
year
and then you're going to want to
and
do
be
it.
able to say with confidence
It's just
how
a,
much
it's
of
just
that
a pain
came from
thing. You don't want the
inflation and how
pain
much
of
it-
giving away
sorry,
your
from
gains.
tariffs and how much of
That's
it
all it is.
didn't. But that's
a
what we'll be
pain thing.
doing.
What's
We'll
up,
be doing
guys?
that, and so will everybody else, and we'll all be trying very hard to make that assessment. And you know, I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what, in your mind, would make something cross from noise to a signal, what that threshold would look like?
You know, it would depend on what we're talking about.
Let's go down to a
I mean,
5. Let's go down to a
obviously
15.
You're
Or go
looking
up.
for direct
So look at the
evidence that-
15,
that
right?
particular
15
pieces
says that we have a
of
shelf right
inflation
here
are-
that has not been
are
tapped,
clearly
right?
not
So now price is
caused by
fractal.
tariffs, for example.
So
It's
we just have
something
to
that was,
imagine that price
you
could
know, in
come
the
back
service
and tap
sector
this.
that was far away
Okay,
from
today.
anything that's tariffed.
And I wouldn't be
might think,
surprised
okay,
if
well,
she
that
did.
is,
There's a fair value
like,
gap
frankly,
down
housing
here,
services
possibly
inflation.
overnight session even.
Which
Maybe
by
we
the
don't
way, has
pump
been
as hard
behaving
until we
well.
get this
You know, which
this
for
retest.
some time was kind of our problem. Now it's slow, but it's definitely, you know,
There's
moving
your
down
break
in a
higher.
very good
Damn,
way.
who's in profit, man?
It's
Type
more
W in
now
chat.
with goods and to
Let's
some
go.
extent with non-housing services inflation.
Oh man, looking really good now. Taking the stop loss, moving it up to this consolidation
Thanks
area.
for
We have
taking
a
our
new
questions,
shelf
Chair Powell.
forming.
Kelly O'Grady,
So let's line that
CBS
out.
News. So consumer sentiment has dipped dramatically, but you say the economy and the hard
All right, we have
data
a new
is
shelf.
still
Let's
solid.
go ahead and
what is your
like how would
message
that
to
be
consumers
support and
that
resistance? Some
clearly
idiot told me this is
disagree
support and
and
resistance.
don't
That's not fucking
feel
support
that
and
strength
resistance.
because
Don't
the
be a
hard
moron.
data they're
Stop
looking
it.
at is their grocery bill.
Don't comment in my fucking YouTube
Okay, so a
video if
couple
you don't know
things.
what
The
we're talking about.
grocery bill is about
I just wanna slap people
past
sometimes.
inflation.
He's being a dick
really.
to me, too,
There was
you know what I
inflation in 21, 2, and 3.
Okay, this is pretty
Prices
good.
went
We're
up.
at a
The current level of-
1.9
It's not the
on this
change in
trade.
prices. It's
And this was good. This is like a
unhappy
retest
and they're not
continuation
wrong to
model.
be unhappy that prices
You got
went
a
up
nice.
quite a bit.
It's not a
and they're
nice
paying
shelf. You
lot
got a
for
thin
those
shelf.
things. So
Dude,
that's-
price
I
is
think
taking
that is the
off. I'm
fundamental
FOMOing
fact, and has
hard
been
right
for
now on my
a
own
long
account.
time, a couple of years.
Oh my gosh.
Why
I'm
people are
FOMOing so
unhappy
hard
with
right
the-
now.
with
Shit, I want in.
the economy. It's not that the economy's not growing. It's not
okay,
that inflation
so
is
wait
really
for the
high.
retest.
It's not that unemployment is high. It's none of those
Here's
things.
where the stop loss
We
is
have,
at. Not too close.
4.1%.
Not too far.
Unemployment. We've got
God,
2% growth.
you guys are going to be in
and,
so much profit right
it's
now.
a pretty good
Holy
economy.
shit.
But
Just
people are
hold
unhappy
on.
because of the
Let it
price
trail.
level.
Let
And
like
I
keep
do
trailing.
completely
Keep doing
understand
this.
and accept that.
Take
And just to
some
follow
time,
up, why
relax,
are you still
breathe.
projecting 2 rate
I want you to have
cuts
the
this
biggest
year
win you've
if
ever
your
had in your
own
life right now?
projections show inflation higher for longer?
I want you to have
Does
a
that
huge
mean
win.
you
Maybe
see
not
a
the biggest one in your
slowdown
life,
in
but
economic
a big
growth
one.
as a real
Okay?
threat?
So I
want
think
you to
if
have a
you,
big one.
yeah, I mean,
Pushing 120.
remember we came into this with at the
Low?
December
We're
meeting.
about to blow off the top?
median was 2
Really?
cuts. The median.
We
was.
out of here?
So you come in
We
and
outta
you
here,
see,
bruh?
broadly speaking, weaker growth but higher inflation.
NVIDIA.
And they
Let's
kind
see.
of balance each other
Oh,
out. So
shit.
you think And
Yeah.
unemployment is really, they're really only
wow,
only
she
a
gets past that
1/10 change.
120 level.
So there's just
We're
not a
looking
big change in the
pretty
forecast.
juicy,
There
man.
really
At least
isn't.
121.
Modest,
Damn. Okay,
you know,
guys.
meaningfully higher
Don't be scared of the
pullbacks.
pullbacks. Don't be scared of the pullbacks.
Right?
Relax.
So
Set
they
your
cancel
stop
each
loss
other
up
out,
here.
and people just said, okay,
Don't be
I'm gonna
scared
stay
now.
here. But the
Let her
second
retest
factor
the
is
shelf.
it's so highly
Let her breathe.
uncertain. It is
Don't be
just,
freaking
you know,
out.
We're sitting here thinking, and we
That's
we
what I'm trying to
obviously
say.
are
A lot of
in
people take their
touch
profit too soon,
with businesses
and then they let
households all
their
over the
accounts go
country.
into
We have
drawdown for far too
an
long. So don't be
extraordinary
that
network of
person.
contacts that come
Let
in
it breathe.
through the reserve
Let it
banks
reclaim
and put in the beige
retap the
book,
shelf
and also
and
through
go.
contacts
Okay?
at the board.
Leg up.
And we
leg
get
up,
all that,
leg
and
up.
we do understand
All we
that
want.
sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time, and that probably has to do with
retesting the
you know,
shelf. She could go down in
turmoil
the
at
consolidation. We
beginning
have
of an
thin
administration that's
consolidation,
making,
right? Thin.
You know,
so if you go
big
too
changes
close,
in areas of policy,
you're going to probably get
and
tapped out.
that's
If you're trying to
probably part
really
of it.
trail this, we're
I
in a
do
nice
think the
uptrend.
underlying
Let her breathe.
unhappiness people have about the economy, though,
Let
is
her
more,
breathe. Don't
is
worry
more
about
the
your
price
lines
level.
on your chart. They don't mean anything.
Hi, Victoria Guido with Politico. I wanted to ask, first of all, if you could clarify. You were talking about how tariffs were a good part of the uptick in the inflation forecast. And I
Okay,
was just wondering what
am I
that
tripping?
specifically
Is there a bottom
refers
worker
to.
there?
Is that the
Oh, yeah,
tariffs
there's a bottom. Okay.
that have already been put in place? Is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind,
they're not going to like this.
talking
What
a
she
little more
just
about the
said.
balance sheet
Talking
decision
about tariffs,
and what
April
drove
2nd. That's
that.
like a big trigger.
Did that have anything
We'll
to do
see.
with expectations of
Don't
how
be
the debt
triggering us,
ceiling
man. We're
raising
trying to
and
get
debt
our
ceiling might
longs
affect the
going.
reserves
Shut
again?
up.
Yeah. So
Get this lady
in
off the freaking mic,
You'll
man.
see that there's not further
right.
progress on core inflation.
Guys,
this
tap
year.
the
We're
like
kind
button.
of
Let's go, baby.
side-
Let's get the
flatlining,
likes
going
out of
sideways.
here. Come on, man.
We don't ask people to write down how much
Okay,
of this is
so
from tariffs and how much
stop
of it is
loss
not.
right here.
But some of it is
You know,
from
I haven't
tariffs.
really labeled
We know
this,
that
just so
tariffs are
everyone's
coming
clear.
in. We know that they're probably already. All forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I think. I guess the way
I
I'd
need
say
another
it
leg
is,
up. VFI is about to cross over. I want another leg up right
you know,
here.
it was the flows in and out of the.
Okay, we can take our break even.
the
See how this
TGA that
wasn't
got us thinking
tested?
about
You got to
it,
be
but
careful
as
there.
we-
She could just grab a
as we
high and
thought
go and
about
retest.
it,
You got to be
we
careful
really
right
came
here.
to
She
the
didn't
view
retest.
that this was a good time to make the
Same
move
thing
that we
down
made.
here.
And
so we'll just wait for her to leg higher.
Broadly,
You can take your stop loss and move it up into this
we
consolidation,
would do
baby
the same thing we'd
consolidation
already
now.
done, which is
We have a
once
previous
I guess in
high, so this is
June,
going to be some high time frame liquidity right here.
Was it June? Whenever it was, we
Okay.
lowered the pace.
This is going to be a
of
nice.
QT, and we're just going to do that again. We're going to cut
This
it.
will be a
roughly in
nice
half.
level. She might
And the sense of
consolidate
that
between
is,
these two levels for a
if you're
minute.
cutting the pace of QT roughly in half,
Here's
then
the
the
new
runway
shelf.
is probably doubled.
And this is
Okay,
how
so
you
it's gonna-
make your
it's gonna-
bank.
it's gonna
This is
be
how you
slower for
come back
longer.
from 5 losses,
And
right? This
people
is
really
how
like
you
that.
do it,
People
man. I'm
thought
telling you.
that's a good idea.
So
know,
you
it's
might
like a
get
plane. Think of
annoyed
it like a
that it's
plane
not
coming
like
in
when
for
the
a
50
landing.
crosses 100, you
As we get
absolutely
closer, and
but
by the
no,
way, we
you
still
pick the
think
right
the
moves, you
reserves
pick the
are
right day,
abundant,
you pick the right time,
although
the
you
right
begin
trade,
to see
and then
some
you
of the
let
some of the
that
things we look at
fucker
begin to
ride.
react a
That's
little
how
bit,
you
but we
do
still
it.
think that they're abundant. And of course,
There ain't
now
no such thing as a
the
take profit
TGA is
level.
emptying out, so
People that say
reserves
that are not profitable. I'm
higher
telling
now,
you, man.
so you can't really see
They're
the
just not.
underlying signal.
Okay.
So we came around to the view.
See, it used this liquidity
it had a
to
lot
what?
of appeal,
Break
so we
out.
did it.
And most
Really
likely it'll
has
break and
no
retest and keep
implications at all for monetary policy.
Yo, I'm
It has
FOMO'd
no
right now so
implications at
hard. I
all
want price
for
to
the
pull
ultimate
back.
size of the
She may
balance
not do
sheet.
it.
It isn't sending a signal in any hidden
She
way
may not do it, bro.
that you can.
And we're
try to
now
tease out.
retesting
It's
my
just not
shelf
there. We're-
on a
we're
higher
basically- it's very
freaking
consistent
time
with our
frame.
plans
Unbelievable.
and
We
our
got no
practices
top wick over here.
that
This
we
is what I've been
published and that we
calling,
followed
telling you this
since
daily
we began
time
this. What is a very
frame is going to
successful,
attack this
rundown of the balance
no
sheet.
top wick
Again,
candle.
the second
She's
time
finally
that
getting
we've
there.
slowed
We
the
can
pace,
now take our
and
stop
we've
loss.
said that we
Shit,
would
man, this is a
stop when
big
we
ass
were
move. You guys
somewhat
are.
above the level we
Who's
judge as
in
healthy.
right
And
now?
Clearly, we're not at that
Who
level
is
yet,
in
but
right
we're going
now?
to be approaching it
Let's
more slowly.
go, you guys.
It's a common sense kind
What the
kind of a
hell?
thing, and it had pretty
Who
broad
type
appeal.
W right now in chat?
Qs
If
are
you're
about
in
to
right
hit
now,
484.
type
We
W.
called
This is
that
like
before the meeting.
This is a
said we
wild
could go
trade
from
right
476
here.
to
This
484.
got away from us. This is badass.
Especially in the alpha report.
You guys
this
have to
morning.
go
Make
and
sure you're
post
part of
this in the
membership.
school
It's less
group
than
when we're done.
$1.70 a day. Meetkevin.com. You get
And
that
if you're
alpha report
not
every day.
joined to
Would you still say they remain
the main group,
well anchored today? And
I don't
just
even know
to
what you're doing.
reiterate the
Like, what are you doing? You're just lurking? Like, what are you doing?
Well,
you're deciding whether or not you're wanting to be
more radical shift to the policy
whether you're going to
path
stick with
today.
this strategy or the 10 other ones you've been looking at.
When we talk about
Come
inflation
on, man, just stick with
expectations
something.
being
Even if it's
well
not
anchored,
ours, just stick
we're
with
talking
something.
about
dude.
longer run.
Find somebody
inflation
that has something
expectations.
for real that does it live.
And they really haven't moved.
And if they're
much.
successful, just do what they're doing.
If at all. There's
do
one
what they're
reading
doing,
that
man.
everyone's focusing on that's
That's it.
higher,
That's
but
what I
the other
suggest
survey
to
readings and
anyone
the
trying to get
market-based readings
profitable.
all
Okay,
show
high time frame liquidity
relatively,
grabbed, and look at this.
you
Look
know,
at this.
well
Look at
anchored
this.
Inflation
6
expectations.
candles.
You would expect that
That's what I said I
expectations
wanted.
of inflation over the course of the year would move around.
Your boy
because
over here,
conditions change.
your
And
boy,
in this case,
calling
we
the
have
shots.
tariffs coming in. We don't know how
I'm
big.
a great
what's
backseat
the-
driver.
There's some things we don't know, but we kind of know they're going to be
I think I'm
tariffs,
gonna
and
scale
they
it.
tend to
I don't
bring
know what to
growth
tell you.
down. They tend to bring
I think I'm
inflation
just
up
going to scale it.
in the first instance. So,
NVIDIA hits.
So I would
Yeah,
say,
120.
you know,
Nice.
I'm not dismissing what we're seeing in short-term inflation.
Yeah, she's at
expectations. We, as I
119.95
mentioned,
right now.
Follow that very carefully.
I'm waiting on
But when we say
funds.
expectations are
waiting on funds. Okay,
well anchored,
okay,
we're really
okay.
looking
Got
at
you.
longer
Yeah,
terms,
I
5
feel
year
your
and
pain
out.
right
There's
now.
really no story
let's
to
freaking
tell
go.
5 years
So
and
we got
out,
some W's
either in
in
market
here.
based or
We
in
got like
surveys. But we'll
quite a
watch
few
it. I mean,
people
we're
in
not
here.
you know,
I'll ask you to
we're
post
not
it
gonna
again in
miss
a minute once
any evidence
we'll
that
see how
longer
we,
term or medium
see
term
how this
inflation
rocks.
expectations are moving.
Chair Powell, Neil Irwin with Axios. Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government-adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying private job growth, and do you see the composition of job growth as something that has policy implications?
So that has been the case. We talked about that over the course of the last year. There were some good number of months and times when a lot of the job creation was
okay.
was
Let's talk stop
concentrated
loss.
in,
Jesus Christ.
You know, education.
Take your stop loss.
Healthcare,
This is going to be.
state
We're going to have to
governments,
trail
things
tight.
like that.
We have to go in a little bit zoomed in now. You
private
got no
sector job
shelf. We're not
growth
giving
has
back.
been
What is a 60 freaking
moving in a
points?
healthy
70.
range. I mean,
Jesus.
they're all jobs.
Come on,
but,
man.
and
Good
remember,
Lord.
we're
We're not
at
giving
very
that
low
back.
unemployment
Underneath
for,
this candle's wick, she's either going to
quite a
go
time
or
now.
not.
So
That's it. She
I
opens
think it's a
high.
good labor market,
Don't
but
love her
it's-
opening
it's
high. I want the
something that we
bottom wick
monitor
within the
carefully.
first 10,
From our
5 to 10
standpoint,
seconds of the
employment is
candle
employment.
formation. And I want this.
But you know, the
we
elected
got fair
governments
value
in Florida
gaps. She
have,
could be
you know,
targeting down here in the
we
lower
don't
time
have
frame. We got a
policies that address
huge
different kinds of
5-minute
employment.
candle. This is beautiful.
But
This
the
is
elected
like
government has a
60
different role,
points.
and
We're
they can-
moving. We're
they
moving,
can have
guys.
those.
But we have a
QT
lot
question.
of
Does the
green
committee
on this
envision,
1 minute
at some
time
point
frame.
tapering the
So
MBS runoff
you know, you
as
just
well?
don't want to give that back, man. You don't want to
think
give that back.
Tapering it.
Could this
I
keep
don't know. There's
going?
no plan
Yes.
to do that. You know, at
You
a certain
could
point,
you could put
we'll
this a
stop
little bit,
runoff.
you know, further down. You just have
And
to
we may or
accept
may
the
not
fact that
stop
she come all the
MBS
way back to
runoff,
the
though,
shelf.
because you know we can.
So what I would say
we
is go
wanna
tight
Stop runoff in net
and
at some
take this
point.
for
We haven't
every
made any
freaking dime you
decisions
can.
about that. You know, we
Take
want
the market for
want
every
the
dime you
MBS
can.
to
A lot of longs in the market,
roll off
so
our balance sheet.
You know, we may not reverse
really
right now,
strongly desire
but
that.
the
So,
longs are, you know.
but we haven't made any decisions about that.
I
You
just
know,
can't
we
imagine
will-
it's going to be
I
this
think
easy.
we'd,
45.
We'd look carefully at letting that keep going, but hold the
Cool.
overall size of the balance sheet in, you know, constant at some point, a point that we're not out yet.
Simon Rabinovich with The Economist. Thank you, Chair Powell. Several times today you've said that you feel
already
you're
hit
well positioned to wait for
20,121.
greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales, plunge in confidence surveys. Today, not only did the S&P mark down the growth outlook, 17 of 19 see risks to the downside. So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at, you know, we're at a place where we can cut, or we can hold what is clearly a restrictive stance of policy. And that's what I mean. I think that's well positioned. Forecasting right now, forecasting is always very, very hard. And in the current situation, I just think uncertainty is remarkably high.
And sorry, standing here today, would you be surprised to pivot back towards rate cuts in May?
I think we're not going to be in any hurry to move. As I mentioned, I think we're well positioned to wait for further clarity and not in any hurry.
Matt Egan with with CNN.
Summary
Thank you,
time.
Chair
Come on.
Powell.
All right, that's it.
The Fed statement released
Like, that would be
today
it.
removed a line
That would be it, man.
previously said the committee
And you
judges
could be
that
out
the
at the
risk to
freaking
achieving
wick up
its
there for the
employment
day. You
and
never know.
inflation goals
There
are
it is.
roughly in balance.
That's on
Can you
bingo.
explain the decision to remove
Okay.
that line? Does it mean that you're
That was a nice.
now
That was a
more
nice trade.
concerned
Okay,
about
one more time,
inflation
guys.
or about-
I know we have like 50
Actually,
some
it does
people in
not mean
here.
either of those things.
Beautiful,
You know,
beautiful trade, man.
Sometimes with language,
You're in a short now. You're
lose
crazy,
its
bro.
It's useful
Yeah,
life.
that
and then
is
we
not the smartest thing to
take it
do
off
right
and
now, in my
we-
opinion.
and that was the
But you
case.
do
So
what
there's
you
really
want.
not meant to be a signal
Hopefully, you're
here.
kidding.
Over the
But if
past
you're
year,
not,
you know,
I hope you all the
conveying
best.
the sense
and
of the balance
I
of
definitely
risks
hope
was
that you
important,
win this. And it
that
looks
they be
like
in
you
balance
could
or
be
close
right.
to
So
being in
shit,
balance.
maybe I'm
That was
just
useful
an idiot.
as we
you know?
approached lift
But
off,
all I
if you
know
remember.
is that
But we're
we
past
called
that.
what
Or sorry, no,
2-3
beginning-
trades on
beginning
stream
to cut.
during FOMC.
So we just took
And
it out. I
we
actually
called him
would
out
say
pretty
that the
nicely,
more
didn't we?
important
So it's pretty good.
thing now
Yeah,
about
type W.
risks, and
If
this is in
you
the,
got
pages
wins
10, 11,
from
12
this
of the
FOMC
S&P, if you look,
thing, and I'm going to go ahead
participants
and take a
widely,
screenshot of
raised
chat
their
right now.
estimate
Love you guys.
of the risks to
Sweet.
of uncertainty,
go,
but also of the
baby.
risks to growth and our employment and inflation mandates.
Right.
That's a more
Nice.
salient point.
Love
now
it,
than
guys.
Whether they're,
Awesome.
Whether they're in balance.
That's a good
Louis,
point.
how many
Just on the
friggin'
stock
come on?
market,
How
the stock
many
market has obviously
friggin'
declined
wins did
significantly
you?
since the Fed
How many trades did you
last
take, bro?
Met. Are you
My
concerned at
gosh.
all about some of the market volatility having a real
20.
economic
I took
impact
20,
in
bro.
terms of hurting business
20.
spending?
There's mini shells
or
on the
consumer
15-second
spending,
time frame. You
especially
see all
among
these mini
higher income
shells?
households?
Dude,
So financial
we
conditions
crushed it.
matter to us because
Let's go.
You know, financial conditions are the main
Let's
channel to
go.
the real economy through which
Let's
our policy
go.
has its effect.
Okay,
So-
that
so
should have
they're
made up
important.
for a
But what
lot
matters
of losses
from
in your
the
bag,
Fed
at least 2 or
standpoint for the
3.
macro economy
That should have
is
made up for just that trade
material
alone,
changes to
let
overall
alone
financial
any other trades that
conditions
we called
are
out today. So
persistent, that last
I don't
for a
know
while,
anybody
long
that
enough to
should
actually
be like.
affect-
There's no
affect economic
reason.
activity. So that's what
Like
we're
if you're
looking for.
down for the week, you got problems
I'm not going
right
to
now.
opine
You
on
need
the
to.
appropriate level of
I don't even know
of
what to
any
tell you,
market,
bro.
Equity,
Like,
debt, commodities, or anything like that.
I don't know. I love you,
and I would
and you're
just
gonna
point you
just
to the-
you're
to the
gonna
bigger
hate me for
picture
saying it
again.
like this because
You
it
know,
sounds
the-
like I'm
the real
egotistical.
economy, the hard
but
data are
you're not
still
listening.
in reasonably
Like
good
I've
shape.
been very
It's the
clear. Like
soft
there's
data,
no
it's the
reason.
surveys
You're either like
that
in
are
your own
showing,
world,
you know,
and
significant
especially if you're
concerns,
trading
downside
real
risks,
money,
and those kind of things.
stop it.
We don't dismiss
Get on a
that.
demo
We're watching
account,
carefully,
man.
But you know,
Stop wasting
we don't
your
wanna
money.
get ahead of that.
Okay,
You know, we wanna
get confident.
Focus on the hard data. This,
Comfortable,
if that's
consistent.
going to
The 3 C's, man.
affect the hard data, we should know it very quickly.
And then give
and
your
of course
money up to the
we'll understand
markets.
that, but you
right?
don't see
but
that.
right now,
That's a warning. That's a warning if I've ever heard one.
Thank you, Chair Powell. Jennifer
I don't know
Schonberger
what he
with
means
Yahoo
by that.
Finance.
But anyways, you get what I'm
As
saying,
you look
man.
to navigate higher inflation and lower
Sound
growth,
is really
the Fed
jacked
has
up right
talked
now?
about heeding the
Really?
lessons from the 1970s.
No, sorry about
Is the
that.
Fed willing to have a recession if it means breaking the back of inflation?
Yeah.
Well,
but anyways, yeah. If you're not up for the
fortunately,
week, I don't know where you're at. You're
we're
not in
a
our group.
situation where we
You're definitely not
have
in our
seen
group.
inflation move down from, you know, higher levels
I don't
to
know.
pretty close to 2%.
It's impossible.
While the unemployment
It's
rate
like
has
the only
remained
possibility for you to be
very
down for the
consistent
week
with
is if you
4.1%.
went and just took a bunch
So
of trades
we now
that had
have
nothing to do with the
inflation
strategy.
coming in from an exogenous
That's the
source,
only
but
reason. That is
the
the only
underlying inflationary picture
Even if you just
before
did
that
1 to
was,
1,
you know, basically 2.5%,
and you were just
inflation,
smart
let's say,
and didn't trade during
and
news,
2%
you should be
growth
up.
and 4% unemployment. So that's
Oh,
what,
nice.
That's what
Oh,
we
I'm just
did.
seeing your
That's
guys'
what
chat.
together,
Hold on.
the
It's kind of
economy
hard to read with those on. Hold on.
accomplished. So I don't see any reason to think that we're looking at
let's
at
see. The
a
last
replay of
candle
the
saved me,
70s or
but still
anything
down
like
a
that.
little.
You know, inflation, underlying inflation is
From today?
you know, still running.
Rob,
in the
what other
twos
trades are you taking,
with
bro?
probably
Post
a
them in
little
the
bit
school
of a
group,
pickup
and we'll give you
associated
feedback.
with tariffs.
All right, this is about learning,
So
not
I
putting you
don't
on
think we're
blast.
facing. I
you
wouldn't
got to
say
stop
we're
with the
in a
stops.
situation that's remotely.
You got to put your
comparable to that.
your stops have got. You got to stop with the stops.
dividend was proposed,
Like
which would send
I made many
$5,000
videos
checks to
about
every
this. The only reason why a
taxpayer
trader
from Doge
loses
savings.
is
President Trump and
90% of
Elon
it is their
Musk
stop
have
loss is
supported
too
this.
tight.
There's
They just
reports
have
there
no
could be a
idea
bill introduced
how
on
to
Capitol
really
Hill.
manage their stop.
What
Just
impact
forget
might
your
that
stops,
have on
Rob.
household
Stop
savings
trading with the
and
stop loss.
spending,
It's scary, I know.
in
Just
terms
stop
of
it.
your
Go to a
growth
demo
and
account.
and
Do
outlook
not
for
put a stop
inflation?
loss on
You
your
know,
trades.
it's not
Feel
appropriate
that
for me to speculate
first,
on
okay? Feel that first.
political
Feel what it
ideas
does to your
or fiscal
account.
policy for
Go
that matter,
demo
so
it,
I'm gonna
right?
pass
Go
on
demo
that.
it and back test. How down? How down would you be if you didn't trade with the stop?
Chair Powell, Daniel
It's
Davis
going to wreck
from
your
Agence
account.
France Presse.
Then go back
You
and look
mentioned
at
that
your
tariffs
sizing.
are already
That's
having
step 2.
at least some impact
All right,
on
and
inflation.
then
I'm just wondering how you and your
when
colleagues
you
in the
come
FOMC
back
have
to
been
the
thinking
charts
about
with
the
real money,
possibility of retaliatory
you
tariffs from
increase
other
your stop,
countries,
you reduce
especially
your
with April
sizing,
2nd
your
coming
overall
up.
exposure,
Was this
which
something you
reduces
considered
your
during this
stress
meeting?
level,
Thanks.
which allows you to
So
take
since the
trades
very
like this
beginning,
and just hold on to them.
we've had
Because
kind of a placeholder.
at the end of the
staff
day,
has a placeholder
you're not scared that you're making
of,
too much money, but you're actually not
range
scared of
of really a
losing
range
anything,
of
obviously,
possible
when you're in the green.
outcomes from
But that's the
tariffs
trick,
and
right?
from trade policy
Not being
generally.
scared
And
of
they
losing
generally
too much
assume
money
full
one way or another.
retaliation
He
in
said
those.
stop trading
And so
with a
that's
stop
kind of
loss
baked
on
into
a
the
demo,
numbers.
correct?
What happens?
Yeah.
It will be
You can't hear?
complicated, and there will be some
Can you guys,
retaliation and some
is
not,
Kevin
and all
your
that. But
big or
ultimately,
little
they're trying
brother?
to, with the
What the hell?
placeholder, give us a broad sense.
Can you guys hear me?
Of
Let me turn
what
his
this might.
ass down. There you go. Is that better? He's not saying anything, and we're pretty much done. Yeah, sorry about that, guys. Maybe that's what it is. Yeah, Kevin's loud. Yeah, well, no more. Okay, so yeah, the razor sharp, that's razor sharp. The tight stop losses are killing you. Okay, so like yeah, basically, bro, brother Rob. Okay, give it up for Rob because Rob's been trading a while. He's in our group. I remember when you joined, you actually stand out to me for some reason. I don't know, maybe something that you said, but you know, you're trading, and you know what? You stand out to me because you're losing when everybody else is winning. That's not a good feeling, and I don't want you to keep feeling that. So learn the shelf method, Rob. The shelf method is going to help you really trail. Like there's no reason why this right here, this should have been a massive win for you, brother. Right? And stop getting overly, you're getting scared when you're in profit. I guarantee you, we've already talked about it a little bit, but when you're in profit, you don't want to lose the money that you're up. So you're taking your profit too soon. And that means you're not taking this break even, right? When I start moving up the break even and price is up here, but my break even's down there, I'm like, oh, I just want to take it up there. I just want to take it. That's the feeling every trader gets. What I'm suggesting is that you just give yourself space when you're up, and let price breathe, and let it move, man. Let her do her thing. And I'm showing you how she moves. This is how price moves. The shelf method is nothing more than structure, how price typically moves, right? That's it. So that way you're not trading like possibilities, you're trading probabilities. The probability is when you break higher that she retests and continues to the top of the range and possibly breaks higher again. As soon as she retests the shelf, you're taking your stop loss and you're moving it in the shelf, because the probabilities is if she retests the shelf, she's probably going to break through it. So I'm not going to give up. I'm going to try to squeeze as much as I can. Look at this. That was perfect. Look, we're out right there. There's a reason why it works, bro. So like that mixed with when you get in a trade, I want you to feel what it's like not having to stop if you've never done it before. Because you're, look, man, you seem like kind of like a traditional trader to me. Tight stop loss, like you're protecting your downside risk at all times, and you're supposed to, right? But I think the way it's traditionally taught gives us the impression that we need to really focus on risk to reward. And that fucks us up, because at the end of the day, if your stop loss keeps getting hit, but the fucking price goes in your direction 9 times out of 10, well, shit, you should be a very profitable trader. Very profitable. But the only reason why you're not is because your stop loss keeps getting hit. So it's like you're right, but then your stop loss gets hit. You're right. And do you see how that doesn't? So for me, it's like my mentor, he was adding positions in drawdown, bro. Most people online, most people watching this stream or watching my videos, they go, that's the most dangerous shit ever. He doesn't know what he's talking about yet. Okay, well, I'm profitable and you're not. I'm literally trading live every day, Monday through Friday. You guys are in here, and I know I got backup on this, right? And it's growing pretty quickly now. People are like, they're seeing what I'm doing now. Now it's like there's no hiding. Like it used to be, my channel was a little small. It's kind of hard to get out there. Now thousands of people every day are seeing me. So it's no bullshit. And like I've been right here the whole time. But the reality is they just can't fathom it, because Smart Money Concepts and all these other videos and other fake ass people telling them how they should trade with this risk to reward mentality. And that's just not how the banks trade. They do, but they don't. Okay. It is about risk to reward, but it's not. Look, you don't want to be risky. I'm not saying to risk your whole bag. I'm saying be smart with your sizing, right? And if it still looks good, but price is at your stop loss level, you need to ask yourself, because, okay, I'll give you one example and then I'm going to hop off, okay? Just because I love you, Rob. I want you to be successful, bro. Watch. Okay, so let's say like we're in this uptrend And I have this entry right here, right? And I'm not saying that I would necessarily do it on this trade. Choose your battles. But let's just say, and I look at this, I go, well, if price did pull back, okay, and let's say that price pulled back into this area right here, all right, in my stop loss area for this particular trade. But she did it in a way where we opened a 1 hour candle. Now follow me, because I'm going to get a little bit more technical. You know where I'm going with this? Okay, where do you think I'm going with this? I wonder if anybody already knows. What if I was in this trade, right? I wasn't paying attention to the 1 hour open. The 1 hour opens, we slam down right away, and the 1 hour, what am I going to say here? What do you guys think? Anybody? Kind of a little bit of this is a flash lesson. Does anybody know what I'm going to say? Anybody? Going once? Yes, CJ, exactly. Right. So these guys trade with me, man. These guys know, man. There you go. What if it opens with no top wick? Right? So no, Rob, not double down, right? I wouldn't be like adding to my position necessarily, right? But I would hang on to it. I would say if a candle opened right here and like had no top wick and it came down like this, bro, we haven't even broken structure right there, you know? So if this is my entry and price comes down here, she hasn't closed the candle body. Unless she closes the candle body, and then I have to be thinking, okay, and then what I would be doing, and this is just truthfully, if this was a 1 hour candle with no top wick, I would probably bump my time frame up to a 3 minute and go, okay, shit. Now where's structure here? And you know where it is? Way down here. So technically for me to get out of that trade and just be like, all right, dude, I surrender, price would have to move there. So you might look at this and go, well, shit, if that's 1 unit of risk, Mike, you're literally risking there's 2 and there's like 4 units of risk, right? On that one stupid little trade. And I would say, yeah, you're right. I am. I admit it. And you might go, well, then I don't like it. And I would go, well, that's why you're getting stopped out and I'm not. Because the probabilities is that price is most likely, if it did come down here, it's going to get stopped by consolidation, by higher time frame trend. We will most likely reverse and create that top wick before I get to my invalidation zone, right? And so once it creates that top wick, now I might rethink. Now I might say, well, fuck this trade, I'm out, you know. Or she comes back, maybe she comes back, I don't know, 3/4, and I take a baby loss. Or, and I'm just going to throw this out here, this is not saying that I do this all the time, but maybe I have an FEG down here that I like, a setup down here that would normally be a long, or maybe on this 5 minute time frame, we have a higher time frame long position off of a shelf, like whatever, like right here or something, right? And that technically would be another entry for me. So I'm looking at it and go, fuck, okay, this actually, everything still looks up. Do you get what I'm saying? Everything still looks up. Fuck it, I'm adding. Here we go, baby. Let's go. And I might have a different, stop loss, but it's the same risk. So my risk to reward, my distance from my stop loss might be bigger, but it's still just 1 unit of risk. So did I technically increase my risk? Yes, but I also increased my chances of winning. Do you understand? You're increasing your chances of winning because price doesn't typically move in a straight line, and I'm with the higher time frame trend, and I have a long position on a higher time frame as well. So it didn't invalidate like the momentum. Does that make sense? My overall trade thesis has not been invalidated. Now, knowing when it's invalidated is the key. And that's what, I would just say to anybody, like, that's what I'm trying to teach you guys. That's what I'm trying to show you at least, right? And I'm just trying to show you what I do. So maybe that helps, but like, that's the whole concept. You have a little, and I'm not saying then the 3 minute gets invalidated, so I go to the 5 minute, and then the 5 minute, then I go 15. No, don't do that. You see what I'm saying? Don't keep bumping up your time frame if you get invalidated. That's how you blow your account. I'm not saying to do that. There has to be you have to know ahead of time where you're going to call it. All right. And a lot of times you look back and you're like, shit, that grabbed my stop loss, but man, I was just too tight. That's like every trader in the world says the same thing. Yeah, she grabbed my stop loss, but ended up going in my direction. Like, shit, well then let's work on that, All right, guys, love you guys. Have a great rest of your evening. I'll see you tomorrow morning live. If you want to find out what we're doing, join the free group. The link is in the link is in chat, pinned. Okay. Go create a post in school. and make everyone who didn't join us jealous. See you guys. Bye. Cheers. Bye.